Operating a business in New England without a legal entity leaves your personal savings exposed to every business risk. Establishing a corporate entity creates a legal boundary between company liabilities and your home or bank account. Without that protection, a single audit or lawsuit bypasses the business. Creditors can target your personal assets, including your residence and retirement accounts, to settle company debts. To encourage local growth, Connecticut has recently streamlined its business registration process and modified its tax requirements for new founders. The state repealed its $250 biennial business entity tax. Currently, starting a business requires a one-time $120 formation fee, making the entry cost significantly lower than in previous years. That $120 fee is the primary requirement for creating a separate legal existence for your operations. However, registering successfully requires more than just a payment. You must choose the specific tax classification that fits your revenue and complete the filing correctly on the state's digital portals. This guide will break down the tax requirements for different entity types, explain how to establish a privacy buffer, and walk through the state's registration portals. Establishing this structure today is a practical step to ensure that business liabilities do not compromise your personal financial security.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact state steps and paperwork, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch as a sole proprietor or cut corners on their initial state filings. And that is exactly why they face massive personal liabilities or get their applications rejected by the Secretary of State. Your business must be a legitimate, separate legal entity. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire LLC or corporation setup for just $0 plus state fees. They take care of all the heavy legal lifting for you, filing your official articles of organization, providing your legally required registered agent service, and setting up your ongoing compliance alerts, so you never miss a state deadline. This step is non-negotiable if you want to operate legally and protect your wealth. I've linked my full in-depth review of Busy in the description, so you can see exactly why they are my top recommendation. Make sure to use my link down below to register your business through Busy today, which will also unlock exclusive discounts and perks. Get your legal foundation handled first. And then, let's get into the step.
Choosing an entity means calculating the lowest tax burden. Most start as an LLC. Profits pass directly to the owner's personal return, taxed at individual rates. For real estate, under Section 12-498, transferring property to an LLC is exempt from conveyance taxes, saving thousands. Additionally, LLCs can elect the pass-through entity tax, allowing members to claim an 87.5% credit against their personal Connecticut income tax. A C-Corporation is generally reserved for larger enterprises needing to issue stock to many shareholders or seek venture capital. C-Corps face a 7.5% business tax on net income, plus a minimum tax. Profits are taxed twice, leading to a higher total tax rate. Large corporations with high income may also be subject to a 10% surtax extended through 2028. Many founders choose an LLC or corporation, then elect S-Corporation status with the IRS to reduce federal tax liability. By splitting income into a reasonable salary and a shareholder distribution, owners only pay self-employment tax on the salary portion. While beneficial for taxes, the S-Corp election adds complexity, requiring the business to maintain a formal payroll system for the owner. Ultimately, your selection depends on your goals: venture capital via a C-Corp, property holding via an LLC, or self-employment tax reduction via an S-Corp. Beyond tax strategy, comply with Connecticut's physical location mandates to keep your entity in good standing. Every business must appoint a statutory agent with a Connecticut street address to receive official notices. P.O. boxes do not meet the state's requirement. While you can serve as your own agent, listing your home address makes it a permanent part of the state's public records, where it can be easily accessed by anyone. This often leads to an increase in unsolicited mail and allows your personal residence to be linked directly to your business filings in public databases. To prevent this, many business owners use a commercial statutory agent, whose address is listed on all state documents.
They receive legal correspondence on your behalf and forward it to you, keeping your home address off the public registry. Utilizing a third-party agent ensures your privacy while meeting the state's mandatory physical presence requirement. Once you have determined your structure and secured an agent, you can complete the registration process through the state's online portals. First, go to business.ct.gov to create an account. If you file your formation documents immediately, you avoid the optional $60 fee for a name reservation. The primary document required is the Certificate of Organization for an LLC or the Certificate of Incorporation for a corporation. You will need to provide your business's NAICS code, the principal office address, and proof of the statutory agent's acceptance. Filing online and paying the $120 fee results in a processing time of approximately 1 to 3 business days. After forming the legal entity, you must connect it to the Connecticut Department of Revenue Services, or DRS, for tax tracking. Within the My Connect portal, find the Business Registration section and select the option to obtain a Connecticut registration number. To complete this registration, you must have your federal EIN, your legal business name, and your banking details ready. You will then specify why you are registering, such as for sales tax collection or reporting new employees to the state. Completing both of these steps, the legal formation with the Secretary of the State and the tax registration with the DRS, ensures your business is fully compliant. Formation is only the first step. To maintain the legal separation between yourself and the business, you must set up the correct internal infrastructure. Obtain your employer identification number from the IRS. This is a free service provided directly by the federal government. Ensure you are using the official.gov website. You must also finalize an operating agreement for an LLC or bylaws for a corporation. While these are internal documents not filed with the state, they define how your business is managed. Without them, your entity may be governed by default state rules that might not align with your interests. Finally, use your EIN and formation documents to open a separate business bank account. Mixing personal and business funds can allow a court to ignore your corporate status, leaving your personal assets vulnerable to business creditors. Consistent financial separation is required to maintain your limited liability. Your business remains protected only as long as you fulfill your ongoing state requirements. Every year, you must file an annual report and pay the $80 fee to the Secretary of the State between the dates of January 1st and March 31st. If you miss this deadline, the state can administratively dissolve your business, which ends your legal authority to operate and voids your liability protection. Operating an unregistered or dissolved business can also lead to fines from the DRS, starting at $250 for the first day and increasing for each day the business remains non-compliant. The $80 annual maintenance cost is a minor expense when compared to the value of the tax exemptions and asset protections you have put in place. Properly registering and maintaining your Connecticut business ensures that the tax advantages and legal protections you have established remain in force. Complete the filing, secure your agent, and finalize your registration today.